Let me stop you right there. We at Cryptonaires do not provide any financial advice. Please do your own research on the projects that we do AMAs on or mention. Thank you and enjoy.
All right, everybody, it's Johnny Fiasco and Scott Reed coming to you with another AMA. This week we've got Kepler DAO. Kepler, can you go ahead and introduce yourself to the people?
For sure. So, hi Johnny, hi Scott. Thanks for hosting me on your channel. This is Kepler 22B. I'm the founder CEO of Kepler DAO. A little bit about myself. I think a little bit about Kepler DAO first. So, what Kepler DAO is doing is building a community investing model for the Web 3.0 world. So, essentially, it's a treasury-backed protocol which will support Web 3 projects across DAOs, Metaverse, DeFi, so on and so forth. And we're essentially building a vision for expanding the VC toolkit into the Web 3.0 world through a system of self-governance. So the community participates with capital, raises its own liquidity, manages its own capital, and deploys it into promising Web3 protocols that they believe in as a community. And of course, in return, gets to share all the profits that the SPV generates out of the treasury. So that's the basic broad aim of the DAO. And a little bit about me, myself and the team. I'm the founder CEO. Like I said, I have a background in engineering and management, also in consulting banking. The team comes from a rich diversity of backgrounds. One of our team members has been into crypto for like over a decade, has run a trading platform, a decentralized trading platform actually. The other team members have a background in operations management, entrepreneurship, and computer science. So that's a little bit about the team and Kepler DAO.
That sounds really excellent. So it's a kind of a complicated concept for some of our newer users. If you had to put Kepler DAO into one sentence, could you give me a very short, like you're explaining to a 5-year-old version for some of the people that maybe this is their first venture into DeFi. They've never gotten into it before. Sell it to them. What is it and how easy is it for them to be involved?
Absolutely. So for a lot of people venturing for the first time into Web3, the main question is, oh, how do I generate wealth, right? How do I make money work in Web3? And through Kepler DAO, they have the opportunity. I'm using the word opportunity because that's what you have. When you hold a token native to the Kepler ecosystem, which represents your ownership into a diversified pool of assets, which are nothing but investments into protocols that are growing Web3, right? So the DAO does the heavy lifting, that the DAO does the hauling on behalf of everybody who's an investor. And all you have to do is invest in a token, right? The Keeper token and the iKeeper tokens, about which we will talk a little bit later, and how they're related to the entire ecosystem of investing. But if you hold that token, you own a part of the SPV. So it's owning a slice in a diversified asset class that gives you not only passive income, but also a chance to participate in true DeFi, Metaverse, DAO gems, right? So in one line, it gives you ownership of a diversified holding of a portfolio that's carefully chosen by experts from the community of Kepler DAO.
So essentially, we might be able to describe your vision as something of an index fund for Web3.
Well, yeah, sort of. More like a mutual fund. So think of it more like a mutual fund, when the community pulls in money, and through a system of self-governance and expertise that they have built in as a community, participates in projects that they believe will become really big in the Web 3.0 space. And then whoever invests into the treasury gets to own a slice of the returns that the SPV generates. So yes, in some sense, it's like a mutual fund, but so you get the returns minus all the heavy lifting that you would otherwise have had to do had you, were you required to participate, were you required to actually do the due diligence yourself on 100 projects.
Absolutely. And I think that is something that we hear a lot of people clamoring for. They want to be involved. They believe in the space. They want to invest, and it's just difficult for them to do so. No one person can run down all of these new projects and do all the research. So it's really awesome that you guys are thinking about that, and that you can do some of that for people who can be involved, who may not otherwise have a chance to do so,
Yeah, absolutely, absolutely. And that's the toolkit that we aim to build, right? How do you, as a community, develop a model which is self-governing and self-returns generating, right? At the end of the day, we don't want this to be like an admin-run show where we're selecting based on our expertise and our connections, projects that we want to generate alphas from. All of this is going to come from the community. The real question is, how do you develop that toolkit to make that process efficient, inclusive, participative, right? And democratic more than anything else.
Absolutely. So when we talk about these projects, I know it's early. Are there any partnerships or projects that you all are looking at specifically that you could reveal, or are those things going to come later?
Yeah, so we have a couple that we have like over a dozen that we're currently in conversation with. We only started this process of actively onboarding some partners on behalf of the community like a week back because, okay, let's rewind a little and let me introduce you to this concept of the fund management team. So that is the hallmark of Kepler DAO's SPV, that it's managed by a fund management team, which is voted in by the community. So these are people that come with diverse experience across different sectors in Web3. And they are the ones that will be tasked with the responsibility of not only sourcing the deals, inbound, outbound, whatever, but also presenting that financial analysis on the protocols that they're investigating to the community. Now, this team is going to come into the picture after the mainnet launch, which is on January 18. The formal institutionalization of this team is going to happen afterwards through a process of voting in by the community, and the whole process will also include people pitching why they're suitable for the job. But we realize that we need to kickstart the process just to get the community warmed up to the idea of how these partnerships might look like, and we ourselves, because this is the very first protocol on not just Ethereum but any chain that's aiming to do something like this, and we need to develop the primers of those toolkit first ourselves in order to put in place that process. And for that, we've initiated conversations with different protocols that we can get our hands into that we think are really promising. Some of them reached out to us, some of them we reached out to, right? Two of the projects that we're actively speaking with is Plastics and Rentable. These are projects that I can take the names of. And Polysynth, three. These are three. Polysynth is a trading platform on Polygon. Plastics is essentially a super interesting model of a marketplace that seeks to bring on board plastic companies and corporations through art, through NFT. And Rentable is basically building a marketplace where you can manage rentals and real estate, basically prop tech on blockchain. So these three I can publicly name that we already have on board. Product partnerships and like the real specifics of how the investment is going to work out is something that is currently under development, but we're regularly having like community engagements with them. AMAs are lined up and so on, and there are like a dozen other protocols that we're speaking to. But very formally, the first batch of 10 protocols, like the first cohort of our Kepler DAO launchpad, is going to be out February 1st week through the FMT, because that's the process that we want to institutionalize for the long run.
So I really like what you just said there. I really like that you guys are going to have your own fund management or research team to look into some of these other projects, and you're not just going to invest into whatever's out there. And right. I think that'll show people, that you guys are trying to do your due diligence to do the best you can to get the best product out there.
Absolutely. Yes, absolutely. It has to be a process whereby we see, that's the whole point of building a community with expertise, that not only do you de-risk yourself, but you also have the combined expertise, right? It's like more minds do better research than just one. So coming back to the question, what's in it for a newbie that really wants to jump on the Web3 wagon, right? That they really get to gain from the combined expertise and knowledge of the community members, right? Some people in the community have been into Web3 since more than a decade now, right? And that sort of expertise is not easily accessible to everybody, right? But everyone does want to take part into Web3 nonetheless. So how do you do that? Through a model of community investing, where you see capital is like commodity, right? There's so many people, so many angels that will put like 50,000 to 100,000 into a project. But what else is there to raising money from a community DAO as opposed to institutional angel investors with a big check size, right? It's the community support that comes with the check, and it's a long-standing partnership that you have with the community. So it becomes like a virtuous loop. You make better investments as a community, you generate more returns for the people, more people join in on the DAO, and you have more and more liquidity to pool into better projects. As you get popular, there's more expertise flowing into the community, and you make even better decisions. So once you set that loop up on a self-governance mode and an automated mode, I think what you have is a clear winner on how people, on why basically people would want to be a part of the community.
Right. Yeah. So speaking of teams, can you elaborate a little bit more on who it is that makes up your team? Because going over the form that you guys gave us, it looks like you guys have a pretty large team compared to some of these other projects that we've talked with and stuff.
Yeah, for sure. So I gave a little bit of introduction to myself, but expanding on that a little bit more, I have worked across sectors as a strategy consultant, right, with one of the basically the biggest consulting firm in the world, right? So I have an experience in, sectors across finance, energy, so on and so forth. There are like just so many, right? Before that, I did an MBA, and I'm a biochemical engineer by profession. Not by profession, but by education. How I came into this was back in college. This was like 2015, 16, right? When crypto was really new and not a lot of people knew about it. I used to do a lot of content writing for a Swedish company, and that's what got me really interested, because as a content writer, there was just so much research that I was doing every day, and this was, without pay, without nothing. I was just interested, so I wanted to learn more, right? And that's how you get into circles of people who are actually doing it for a long time. And that's what got me interested and got me into this thing. And since then, I've been like in and out of crypto, because I had a regular job, right? I had a really stressful job outside my interest areas. But like earlier this year, I was really following what's happening in the DeFi space, and then came like the DAO summer, right? And I was like, okay, given the expertise that all of us have, this is something that we can really build for the Web 3.0 world, right? Because this model is so broken in Web 2, right? I personally think the VC model is like super broken in the Web 2 world. It's so inefficient. Think of it like billions and billions of dollars statistically go into creating maybe one unicorn, right? And that is super inefficient. On the other hand, think about Ethereum. Ethereum as a protocol has churned out like more than 10 unicorns already, right? With probably like 1/10 the amount of investment that all of the Web2 VC world has put in. So it's just a much more efficient, much more composable model towards building something of value, right? The other people on the team are, like I told you, one has been into crypto for a really long time, has had his own decentralized trading platform, a remittance wallet, so on and so forth. All of us are engineers, though, in terms of background, and two people have a background in entrepreneurship, so they have been building SaaS toolkits for the last 3-4 years before jumping full-time onto Kepler DAO. And one person is a computer scientist, right? He's been a part of Fortune 500 companies and also had his own startup where he was like the CTO. So this is roughly the background. I think we have a well-rounded team in terms of expertise, in terms of fundamental knowledge, right, in terms of technical knowledge of what it would take to build something like this. And of course, we're trying to onboard a lot of people who could help us with spreading the word and marketing, because that's what's really needed to spread the vision of the project and get more people on board.
100%. It sounds like your team, to be honest, your team sounds amazing, right? It sounds like you have a lot of expertise. However, I'm sure you're paying attention lately in the DAO and DOS spaces. There has been just a absolute avalanche of rug pulls. There's been an avalanche of bad actors in the space. Are you all going to use any type of third-party KYC service so that people can at least have the peace of mind that someone knows who you are, even if you're not going to dox publicly?
Yeah, absolutely. So, John, there are two ways that we're internally discussing about doing this, right? Basically, at the end of the day, what's important is that the treasury remains in safe hands, right? So, and there are two ways to do it. Either we dox ourselves, so one is mostly like a reactive approach. So if something goes wrong, then you have someone to rely on, which could be a third-party KYC vendor. There's a more proactive approach to keeping the treasury safe as well, which is to include community members into the multi-sig wallets. And we do already have audited contracts and a multi-sig wallet. To include more community members, which the community trusts into the multi-sig. So that way we dissipate the power from the admins and give it to people to control the treasury that in any way is contributed by them, right? So these are two ways that we can do it. We have, of course, been exploring the first one because the community was really keen on getting us KYC'd. We have spoken with a couple of vendors, and the idea was to get KYC'd to a third party after the audit, because that was the requirement that everybody had. There are not very many vendors that provide a KYC solution, and they're very specific to the kind of audit firm you choose. The one our audit firm was Oxguard, and the 2-3 vendors that were willing to provide us with their KYC solution with this audit report are just taking a lot of time to come back to us, and we're still negotiating on the rates because it's like treasury money, and there's like a 2x difference between what they quoted to us 15 days back and what they're quoting right now. So there's negotiations that's going on. The COO is doing it, so I'm not personally involved, but from what I understand, they're just waiting to hear back from them after the holidays, so like after the new year. But as soon as they're back, it's going to take not more than 2 to 3 days to do it.
Hey, I think the people will appreciate at least your transparency, and the fact that you are pursuing it. And I also love the idea of bringing people that the community trusts onto the multi-sig wallet. I think that seems to be a solution a lot of people are exploring these days, and I think that can work well as well. So you've mentioned the power of the DAO, kind of bringing in the vote of the people, the democratic idea, right? What is it what does it take to be able to vote on Kepler? What are you going to have to do? Is there a number of tokens? Is it anyone who's staking? How are you all set up?
Right. So this is an important question, and not like all the nuts and bolts have been figured out yet, because we're still waiting for the public launch to actually see what is the distribution and of the tokens within the community members, right? Because we really need to know that to make any strategy on voting on Snapshot. Our Snapshot is live. Currently, it's like there are like many strategies on it. It really depends on the kind of decision that's to be taken, right? Of course, all decisions are going to have an inbuilt anti-veil strategy. So there's a threshold beyond which, if you hold tokens, your voting power doesn't remain 1-to-1. That's how the strategy works. So essentially, to make it democratic, you need to give the power to people who are actually invested in the project. So yes, you will have to hold a token for you to be able to vote on critical decisions, right? But beyond a point, it's not like if you are just holding a lot of tokens, you have infinite amount of power. So that is something that's a balancing that we're doing right now, and to figure out the most optimal strategy. And in fact, this is like a meta thing, but we've invited the community to make those strategies. So we really want to allow the community to put forward their suggestions of how they think the voting should be done on critical decisions. Some of them, for example, policy decisions, we're thinking that the admin team shouldn't be involved at all, right? It's only going to be to people who participate a lot. So, for example, whenever there's a town hall, whenever there's an AMA, the people who come up with active suggestions and really are participative and constructive discussion on how to improve the DAO, even if they don't hold a token, but hold a token of attendance, which is something called POPs. So if they hold a token of attendance and token of participation, they might be able to take part in governance decisions, wherein you don't necessarily have to hold the token, but you have to have some proof that I was really active in all the discussions that went on within the DAO. So it really depends on what kind of decision is being voted upon on. If it's simply like a governance policy decisions, yes, we're not going to mandate token holding, but for most decisions, it is going to be linked. It is going to be a function of your holding of the tokens, but we will try to make that just through the strategy, through how your votes get counted, as uniform, as democratic as possible. So and one of the highlights that I spoke about was the anti-veil strategy. So it's not like if you accumulate or hold tokens, you will be able to influence a lot of decisions.
That's, I think, a good, it's a good start to a solution. Everybody's trying to deal with how do you stop whales from controlling a project, or someone being able to come in and buy essentially too much of an influence in the project. And it's good to hear that you're reaching out to the community for answers to that as well. And speaking of the token, and
Right.
speaking of, voting, what are your tokenomics going to be like at launch? Can you give us just a brief breakdown? How many tokens are you launching with? What was the whitelist price or pre-sale price, if you had one? What do you expect to launch at? Just give us a brief tokenomics breakdown if you can.
Yes, for sure. So let me first take you through. I would also like the audience to. I would request the audience to go over to Medium and read those articles because they're over there. But I will give a brief rundown of how it looks like. So the tokens that are there in the ecosystem, not currently they're only alpha tokens, but the tokens that are going to be there, at least on the mainnet launch, are going to be the keeper tokens, the TRUVs, which is nothing but like staked keeper, and the iKeeper tokens, which are essentially tokens minted by the SPV that does the investment. So I'm going to repeat: keeper tokens, TRUVs, and iKeeper tokens. What we have right now is a primer token. It's called the alpha token, a keeper token. This has been inspired by Olympus, of course. The alpha token was sold at $10 to the community at the IDO. The price that we're aiming at on the Copper launch is $100. We're thinking of a split, so maybe just to like let more people participate, because it's an expensive token, but we haven't taken that call yet. So for now, $10 was the IDO price, and we minted 220,000 alpha tokens, out of which 75,000 are already sold. 75,000 are already sold. Some of them at $10, and some of them at $100, because a pre-sale is going on, wherein you get a discount on the $100 that you will pitch in per token. So about like 145,000 tokens are left, which are going to go into the Copper launch. So that's how it roughly looks with the alpha tokens. Now, alpha tokens, anything that's left over is going to be burned when we hit the main net. So when you finally stand on January 18 and look at the Kepler ecosystem, it's going to have on the DEX keeper tokens, pools of keeper tokens, and whatever people are going to be staking are called the TRUVs. Now, it's important to understand that there is no fixed, predetermined limit of how many Keeper tokens are going to be. It's like Ohm tokens. It's an inflationary economic model. So you mint tokens. For example, whenever Ohm gives staking rewards, so whenever you earn as ohms, those tokens are minted out of thin air. So there's no fixed supply. We have a slightly different model. It is inflationary, yes, but the minting is going to come from the appreciation of value of the iKeeper tokens. So let me just explain that a little bit. When you put in money through bonding, you purchase the Keeper tokens, right? And all of these tokens are inflationary, by the way. So you put in money to put liquidity into the treasury, you get at a discount to the market price, Keeper tokens. When you stake the Keeper token, staking is nothing but it's like just a vanilla form of incentivizing people to pool in more liquidity. That's when you get the TRUVs. These TRUVs are basically just one-to-one exchangeable with the Keeper tokens after the West, right? So every TRUV holder is empowered to earn iKeeper tokens, which are like the king of the ecosystem, right? The iKeeper tokens is what makes you a holder of the investments that the SPV does. And that's how you own a slice of the returns that the SPV makes on the investments. Now, the iKeeper tokens are minted every time the SPV makes an investment. So let's say the SPV goes ahead and puts $100,000 into a project. 100,000 tokens will be minted at that point in time, right? Now, let's say your SPV value, the value of your investments, increases to 150,000. So each iKeeper token will become 1.5 times its value. The extra 50% is going to be redistributed back to the community through the holding of iKeeper tokens. So essentially, it's like it's not random rebases that you earn as rewards, but you earn as rewards actual returns from the investments that the SPV made. Now, because there's no fixed supply of all of these, you might ask, like, how is this inflationary tokenomics going to help maintain the price of the Keeper token in the long run? Because that's a question I get very often, because it's inflationary, right? That's what Ohm and Klima are struggling with. That once the market perception drops, the value of the token really drops, and then what do you do? Because you had been minting them out of thin air. The key difference here is that we're not minting tokens out of thin air. They're only minted once a positive return is realized on the value of the SPV. There is no other market operation which will allow us to mint tokens out of thin air. So that's how it's sort of, is not a hyperinflationary model wherein the value of the token will just crash only because you're minting. But the actual increase in the number of tokens is backed by a real increase in the value of the SPV. Now, all these tokens are not fixed in number, like I said. The price is going to be a market-determined price once we hit the Ethereum mainnet. So that's not in my control. But it starts at whatever, the mainnet price will start at whatever the price discovery will be on Copper Launch. And the Copper Launch, which is like a Dutch auction, right, will start at $105. So we did the simulation, and it's going to be around $105. And from there on, it really depends on the buying and the selling pressure. And whatever ultimately becomes out to be the price will be the one that we're going to seeding our pancake swap or swishy swap pools with when we hit the mainnet.
Sure. So that is quite an interesting tokenomics model in that, we've all been a part of many DAOs at this point. I think most of our audience will have participated in some type of DAO. And you're right. I think the inflationary model is something that everyone is struggling with. And it's refreshing to hear that you're at least, attempting to address that by minting tokens from actual external revenue sources. That is something new. That is something that no one has yet done successfully. We hear a lot about people wanting to bring in external revenue sources, but very little about it actually being done. So I applaud you for having a plan for that and having your tokenomics be based on that. And that kind of takes us into the question of sustainability.
Right.
Oh, go ahead.
No. I was just saying thank you. We're hoping that we're able to sustainably build this model. Because the moment.
So the next question that I normally ask.
Yeah, please go ahead.
I was going to say the next question that I normally ask when we talk about tokenomics is, okay, how are you going to sustain these tokenomics? But it seems like you've kind of built the sustainability into the tokenomics itself,
Absolutely.
which
Absolutely.
is.
That's a great observation.
Yeah,
This
go
is
ahead.
a question that I get. Yeah, this is a question that I get on the AMAs again and again and again. Like, how is this model sustainable? Because everyone's been seeing Olympus and Klima and other DAOs and every other DAO just like stumble and really sort of struggle with sustainability, right? How do you keep the price at the sustainable level of the tokens, right? Because initially, to attract people, DAOs give out these unrealistic APYs that I don't think most newbie investors realize is just from redistribution of minted tokens through a random reward rate, right? Think about it, that there's a random reward rate that's been set and the tokens are being minted at that rate to give an APY, which doesn't have a technical basis. It could be 10,000, it could be 10 million, it could be whatever, right? I was looking at Snowbank and there were so many zeros. I was like, oh, fuck, what is this, right? So yeah, it's like a neat little trick to get people on board. But yeah, at the end of the day, it's only a trick. There's no real value accrual that's coming, that these rebases are coming from, and that's the fallacy that we really want to solve for and build into our model. So the rebasing is always going to come from an appreciation of the real investment value. It's not going to come from any sort of unbagged reward rate, so as to say. So every time you see an increase in the value of the iKeeper tokens, you can be sure that, okay, I made, as a community, sound investment into good protocols that the token of which actually appreciated in value. And just because we're talking about this, a lot of investments that we're going to be doing is going to be in early stage projects that probably just have a SAFT, right? They're not even listed on a DEX or even a centralized exchange. Nowhere that you're not going to be finding those tokens on Bitmart or on other DEXs, right? Or Binance or anywhere. So the way that this is also like a follow-up question that I get, that, okay, how are you going to ascertain the market value of these tokens? There is no simple toolkit to do that, because it's not like you can just hit on APIs and get that number from wherever they're listed. We have to develop that integrated model so that we keep fetching these values and we keep a track of the tokens that we've invested in through their SAFT, how these protocols are raising capital, at what price, so on and so forth. And that for very early stage protocols, let's say the first ever private sale price is X, it can easily be like 10X when it hits the public market. So that is the kind of upside that we're chasing on early stage protocols. Now it'll all depend on the community and our expertise to hunt these protocols down and make them enter into a partnership with us, or like to bring them onto the Kepler ecosystem.
Excellent. So one of the next questions that's going, that I got a lot when we announced we were going to speak with you is, why Ethereum mainnet? Ethereum mainnet, it's the OG. It's been around forever. We've all been on it, and we all know the fees are killer. And we also know that there are a lot of new hot, ecosystems, Polygon, Avalanche, that have been stealing a lot of market share. What's the thinking behind launching on ETH mainnet?
Right. This is also a question that we get a lot, and I think this deserves a lot of explanation. So just generally, the choice of chains actually involves like a trade-off. You cannot have everything. For example, if there are more validators needed, the gas will be higher, but the security would be higher as well. The liquidity would be higher. There's just more people on that protocol. To just give a little bit of comparison, Ethereum has what, 200 billion worth of liquidity, while Polygon has probably like 1/30 of that, right? Just 1/30th. So, and also it depends, the choice depends upon the use case that you're trying to build. Had we been like an HFT firm or like a trading platform or a gaming platform where you need like small ticket size, high frequency transactions, right? Every second, that's when we would jump onto an Ethereum L2 or like other roll-ups, which are much faster and much more gasless as compared to Ethereum. But what we want to optimize for, think about it, as a treasury, it's not every second that you're investing into a protocol, right? We're not doing that. So we need to optimize for other things other than just gas, right? Is the problem that most people have with Ethereum is that, oh, it's very expensive to transact on the Ethereum blockchain, right? I get that, but we don't have to do that often. We have to optimize for other things like network depth, the liquidity on the network, the kind of diversity of projects that you have on the network. Because if I was building on any other chain that has like a $3 billion, $4 billion liquidity, I myself, even if I own like half the liquidity on that network, I'd be what, like 1.52 billion worth in treasury? That's not a big number. So to start with, we chose I'm sorry, lots of noise. Yeah, okay. So to start with, for these reasons, to optimize for liquidity and network strength, and for diversity of projects, we chose the Ethereum mainnet. Also because most, and sorry if I'm wrong, and please correct me, I think most OGs in the crypto world who really understand investments and what it takes to invest in a protocol and a strong community is really sitting on Ethereum right now. Right now, it's Ethereum, and it could be Solana in the future. It could be Polygon. It could be Arbitrum. It could be different chains, but it could be Avex. But right now, my sense is that that chain is Ethereum, and of course, like ETH 2.0 is around the corner. Hopefully, it will be rolled out soon. Their proposals are already doing the rounds. So I'm just, as a team, we're very bullish that ETH is here to stay forever, at least from the point that we're seeing right now. And that said, that once you build that toolkit on any one particular blockchain, it's not like it's a lot of heavy lifting to transfer that model onto other chains, given the need at that point in time. So once we're stabilized on the Ethereum network, we can move on to other networks depending upon what becomes important at that point in time. Maybe we're doing a lot of investments, let's say, in NFTs. Now, Ethereum doesn't have a strong suit there. So maybe we'll go on some other chain where those investments are easier to make or easier to find, are less costly, and so on and so forth. So I hope that explains why we're on Ethereum at the moment. But we're not married to the chain. we will get ourselves onto other chains as and when we grow as a protocol. But I think the first focus should be on building that toolkit more than optimizing for gas, right?
It absolutely does. And I think that's a bold choice. And for a project attempting to climb into the billions of market value, I would have to say I agree. I think it's the right choice. If you're on some of these smaller chains and you're aiming for even a $2 billion market cap, that is going to be an extreme struggle to get that kind of liquidity into your project on some of these smaller forks. And so you're right. If you're not going to be spending a lot in gas as a project, then it makes a lot of sense.
Right.
So basically, you all are an Olympus fork. You have innovated in a lot of ways that I can tell, that I actually highly approve of so far in this interview. Just some of the answers you've given are things that we haven't seen from any other DAO fork project. Can you tell us a little bit about how much code you've added to the audited Olympus contracts, and has your code been audited separately from their audits?
Right. So we forked from Olympus's audited contracts. As of now, there's the new piece of code that was sent before the audit was the code for the sea keepers, which is actually a token that I completely missed in the tokenomics because it's not directly like sort of related to these other tokens, but they're like kind of a warrant. So think of them as like P-owns, warrants that people are given for incentivization, all right? You earn sea keepers, which is exercised at a price of $1 to exchange for keeper tokens. And this is basically a long-term incentivization mechanism. So that is a new piece of code that we added to the audited Olympus contracts. And that has been audited too. It's good to go. Everything is good to go. There are new contracts that are being added to the code base now, such as that for the iKeepers and so on, and for exchange of iKeepers with the other tokens in the ecosystem, how that's going to be distributed, who's going to control that, so on and so forth. And we are we'll be entering into the second audit just after the public launch, once these code bits have been finalized. We're still building some of those, so and they're going to be like, because these are completely new equations, right? These are completely new equations that we're building. They're not taken from anywhere, so it's just taking a little bit of time to build those, and once they're done, they will be audited as well. So the way I see the audit process is something done frequently and repetitively, just to be sure that your codes are okay, because not just for the community, even for ourselves, right? We want to make sure that we're completely safe, right? So the initial code base that was needed up until this point has been taken from Olympus, which has been audited, re-audited because it was already an audited code, and a couple of contracts for the warrants was added. That has undergone an audit as well. The report is all good, and currently under development are other contracts related to the SPV, which is like an absolutely new concept, and those will also get audited before the mainnet launch.
Gotcha. So
Perfect.
I just want to circle back to that Seakeeper token
Yes.
real quick. So if you hold the Keeper token, you're going to be airdropped Seakeeper, or
Okay, so yeah, let me explain. I think this deserves like an explanation of their own. So how do you essentially align incentives of contributors to the growth of the treasury, right? There are many stakeholders that you have in the ecosystem. It's the team, it's the investors, it's the advisors, it's the project partners, and finally, and most importantly, is the community with the fund management team, right? These are key essential stakeholders in the ecosystem. Now, the way to incentivize for long term is that I cannot be giving them keeper, or even myself, keeper tokens, right? Because I will just get them, I will dump them in the market, and the protocol wouldn't grow. So the way to solve for this is actually build a call option, sort of a financial instrument that we call the sea keepers, right? These are essentially warrants. So whatever you earn is in terms of sea keepers, which you can exchange by depositing $1 and taking home a keeper with you that you can then sort of sell in the market. But the vesting schedule is such that you won't be able to do this as and when, right? There are different percentages of the vesting schedule that each one of these stakeholders have. The team can only own, so sea keepers are like half a billion in number. There are 500 million sea keepers. 20% of it, so about like 100 million, is saved up for the team. About like 65 million, these are approx numbers, they're exactly there on the Medium article, which is there on the sea keepers. About like 65 million is for investors. For the advisors, there's about like 50 million, and other 30 million for partnerships. The community actually has the biggest slice. They have close to like 50% of the 500 million tokens. So they have like some, if I recollect correctly, some 225 million tokens. And the cool thing is that it's only the community that doesn't have vesting on the Seakeepers. So as soon as the community member is compensated through Seakeepers, they can immediately just give me $1 and exchange it for a Keeper token and sell it off in the market, right? And these Keeper tokens, the market price is determined, well, by the market. I don't determine it anymore after the mainnet launch. But for the team, investors, and advisors, because you want these people to actually have their skin in the game, they can only, at the max, exchange 6%, 4%, and 3%, roughly. This is how the numbers are: 6%, 4%, and 3% of their maximum allocation, which I told you about earlier, which is 100 million, 65 million, and about 50 million. So that's a very small number. So all the tokens that are given to the team investors and advisors get vested according to the running supply of the keepers. So only when everybody works together to have more and more keepers in circulation do they get the upside from being allocated the Seakeeper warrant tokens. So this really makes sure that you have to work hard.
Right. Got it. Okay. Yep.
Yeah.
I think I got a better picture now.
Right.
And you're basically aligning the interest of the team with the success of the project with this token, and also you're essentially fighting sell pressure from inside the team. Would that be a simple way to sell it?
Absolutely. I think that is the most apt way to summarize this. How do you keep internal people, the advisors, investors, and the team, sort of interested long-term in growing the treasury? The only exception being the
Scott,
community members.
What was that, Johnny?
So community members I was just going to ask if you had any further follow-up, but I guess I'll just take that. So community members, when they earn Seakeeper tokens, they don't have the vesting process that the team does. They would be able to basically capitalize that on that immediately, correct?
Absolutely. That's absolutely right. They don't have a vesting schedule. Or you can also say like their vesting schedule will be decided by the community.
Scott, do you have any further follow-up questions on that, or anything else that you feel like we haven't hit well enough? Anything else our audience might want touched up?
I don't think so. I think that gives us a good general idea of where this project is going and who you guys are. I'm pretty sure you had said that everybody or some of the people were going to be doxxed at some point, didn't you?
Right, to a third party, which is the negotiation that's like currently ongoing. The other way to do it is to include community members in the multisig, so that no person has ownership of the money essentially.
And it was 3 out of 5 for multisig.
Right now the multisig is 3 out of 5. We have plans to get on board more community members so that no particular stakeholder, be it the admins or the community, actually has complete ownership over the treasury. And that's what's important, right? At the end of the day, that no single team or person should have the power to do whatever they want from the treasury money.
Right. Yep, absolutely.
Yeah.
So one more time before we go, can you let everybody know when your launch is, when they'll be able to participate, and what would be the easiest way for them to do that?
Absolutely. So 3 critical pieces of information here. The pre-public sale is already live on the website. It's KeplerDAO.finance. You can log on to the website and there's a banner there which will take you to the DApp, where you can participate as an investor, as an evangelist. It's actually a referral program that's going on. So both the referrer and the referee get 5% discount on the tokens. So that's live, currently live. This is going to run up till January 9. On January 11, we hit the copper launch. That's going to run for 3 days, so January 11 to 12, 13, 14. Wherein we'll be hosting for the public a Dutch auction, the starting price for which would be $100, like it is right now for the pre-public sale. after we've wrapped up the public launch, we're going to be hitting the mainnet on January 18. This is when all the alpha tokens that you would have purchased in the pre-public sale and the public sale would be converted to Keeper tokens, and we would have made pools of Keeper tokens with money that we'll be raising on dexes such as Sushi Swap and Pancake Swap. So these three are like the critical dates. Of course, right now the pre-public sale is ongoing. January 11 to 14 is going to be the copper launch, which is the public sale. It's going to be a Dutch auction style model. January 18, you're going to be able to see the Keeper tokens that you would get from exchanging the A Keeper tokens on the DEX.
Thank you for explaining that. And just so everyone is aware, all of this information is posted in links in your Discord, so that it's easily accessible there if anybody needs it, correct?
Yes, absolutely.
Is there anything else you'd like to tell anyone? Sorry,
no, I think
is there anything else you'd like to tell anybody? Yeah. Perfect.
No, I think we covered a lot, and I would really encourage the community to come on board, join the Discord. There's a lot happening there. We have currently, a lot of ways in which enthusiastic and passionate investors can display their skills to the community and become a part of the fund management team, which is the absolute critical component of the entire DAO. So I would really like the audience to know that if they're interested in being themselves, playing the role of a VC, they should totally hop onto the server and participate in those exercises. And that will also allow any member to not just be a passive holder of the SPV, but to actively take part in the SPV and making critical decisions for the DAO in terms of investments. And if you have some expertise in DeFi sectors, metaverse, DAOs, whatever, gaming, just hop on and we'll be very, very happy to include you in the fund management team.
Well, thank you so much for being here with us. We wish you and your project the best, and we look forward to talking with you in the future. Perhaps after launch, we can do a follow-up where we can tell everybody how's it going, and we can kind of look in the future and see how your vision is playing out.
Yes, totally. Keep tuned, and wish to stay in touch with the Cryptonaires community.
Awesome. We really appreciate your time.
All right.
Appreciate it as well. Thank you, Johnny and Scott, for having me over on this AMA.
Yep. You have a good night.
No.
I'll have a good day.
Thank you.
Yeah.
Thanks, everybody.
Yes, thank you. Have a good one, guys.
Right.
Bye-bye.
Bye.